All right, thanks, Rich. I'll tell you, basically, I've got outlined what I want to try to cover today, and it's a couple things. One, just want to review post-harvest wheat alternatives, which kind of plays into two questions that we got in our registrations. One of those questions being, when should wheat being harvested now be sold? Along with a secondary question of when will the wheat market realize that the wet weather is having a negative effect on the quality of wheat? I can't wait to hear what Dan's got to say on some of those, but I'll look at some of those alternatives. There will not be a recommendation, but we'll try to lay things out for folks. Also, I'll review pre-harvest feed grain and soybean alternatives, but to kind of minimize my time and get into allow Dan to have a little bit more of the time this time because today is report day, right? We had a new crop production report, USDA WASD, which starts looking at some of the supply demand issues, and then we also had a stocks, and so I want to give Dan a little bit of time to touch on that. So the slides will be there on feed grain and soybean alternatives and plans. Spoiler alert, corn prices really haven't triggered any new sales in our plan. But soybean futures have. We got up there over 1060, which was a price target. So we priced another 10% on our soybeans because it's basically moving more on a sideways pattern. But I can't wait to hear what Dan's got to say when we hit the outlook. So I'll get moving here. You've seen this slide before. Really, on a post-harvest standpoint, number one, our goal is to price at a better level than what we could, what the values are today. And so we'll look at all those kind of things. And really, when we think about what can we do, well, A, you can store it unhedged. And I think probably a lot of folks do that historically. You can put on a storage hedge, which is you're storing that crop and you're selling futures. You could sell the crop at harvest and just be done, right? Focus on corn, milo, and everything else you've got going. And I think a lot of folks do that too. You can also do a minimum price contract, which is basically selling the crop and buying a call option. You're essentially avoiding the storage cost, but you do have to re-own that, and you've got that premium cost in the option. Or you can do a call option spread, which is basically selling that crop, buying a call, but then selling it out of the money call, which helps you lower that price of that initial purchase call and also increases your minimum price. So that's something to kind of look at also. So when we think about where we are with the wheat, it's always good to start with what are we seeing as far as carry. And in that small corner there on the top there, I've got just a chart that just shows the carry. And the way to read that is each of those months. So the first trading day of March, April, May, June, and then as of last Friday, what I did was I put in the July futures price, and then I calculated out the monthly carry. So basically, to catch that 7.6 cents for September and in the March 1, I took the difference between the September futures contract, the July futures contract, and divided it by 2 months, right, to get the average monthly carry. And so what we see as we go across there from March to today or to last Friday, the overall carry has gotten larger, right? In March, it was 52 cents and kind of, creeped up a bit. Last Friday, it was 61 cents. And as a result of the reports, last time I looked a few minutes ago, July wheat was down 8.5 cents. March was down 5. So that gap, that 61 cents, is getting a little bit bigger. So we're seeing more and more carry in the futures. And that provides some opportunities to maybe consider storage. And what I've got here is 6 locations across the state. I've got that March wheat futures. And again, this is as of last Friday. Last Friday's close at 627. And at that time, March wheat futures closed at 578. And there's all the closes for various locations across the state. And I've got the current deferred basis, right? So in Colby, it was $1.19 under. Now, what that next column is, a negative 45 cents, that is what the 3-year average basis is in that third week, that end of February period. And so then you go into that next column, expected basis appreciation. That's essentially the deferred basis currently, right? Where basis is now versus where we think it could be come February. And we would expect to see, if we come back to average basis levels, a 74-cent basis appreciation. And if you put on a storage hedge, that is where you can kind of make some money. And in the blue, I've got some estimates of commercial storage costs and expected returns, and in the green, expected on-farm storage costs and expected storage returns. And what we're seeing is, again, while all these locations are different, right? We are seeing some potential, right? We're seeing some opportunities for storage. Now, again, historically, and I've said this many times, historically, storing wheat does not pay. On average, it does not pay. But in any average, that means some years it has and some years it hasn't. But I think the question is this year going to be different? We're seeing very wide basis. We're seeing a pretty solid carry. Will prices rise enough to make unhedged storage work? Will basis appreciate enough to make a storage hedge work? That one I feel a little bit more confident in. But the thing I want to point out here in that blue columns there, still, there's not that many. I mean, like, for example, Topeka, Northeast Kansas, it would say storage commercially is not going to work, right? It's losing. And if you're only going to make 10 cents or so, which we're seeing across all of the eastern part of the state, storing wheat probably, at least commercially, isn't going to work. So when we make this decision, do I want to store or not? A, do I have the space to do it? And am I willing to do it? But wheat always opens up that opportunity that if I've got, and I'm going to bring in that second question, when's the market going to realize we don't have as much quality wheat as sometimes we would? That makes, if you've got good quality wheat, that opportunity to create positive returns to your storage is even bigger. But you've got to store on farm if that's the case. A, because your storage costs are lower, but also because that way you can go down and chase where they're paying for quality wheat and maybe trying to get some of those protein premiums that might be available in a poor quality year. So that would be the one thing, if that works. Not everybody's got the storage space, let alone storage space for wheat. So that's a tough decision. What are our alternatives? Well, we could sell the grain. And right now, this is a central Kansas example. It was roughly 472 last Friday in central Kansas. We could sell the grain and buy a call option. But, I looked at the money at 580 and that would cost 40 cents. So that puts my minimum price right at 431, which is significantly lower than where I'm at now. Right. So that's not a good situation. We could sell the grain, buy a call, I'm in that column C, and then sell a call to help make that initial one I buy a little bit less expensive. That raises my minimum, but still significantly lower. The third thing I can do is go to that D, or fourth thing, is sell the grain and buy two calls. Now, the thing I want to say is that A is going to get that minimum price much closer to where we are right now as far as cash prices, but doubling up on the number of calls sold increases the minimum price, but it also adds risk. Because once those calls move past, once March futures go past 660, if we'd see that good of a rally, those are going to start costing you, right? You're going to get a margin call. So you definitely need to have an exit strategy. So there's definitely an added risk if you do that alternative number C, letter C. So I think there's a bit of concern. You really want to be someone who's experienced using options before you even consider that. And then E, storage hedge, on-farm storage and a hedge. It looks like it could make a profit. Expected profit there of 36 cents. And note, the expected basis, the 3-year average is 35 cents. I put in 40 cents saying, hey, we could be lower. Now, again, this year, if we do see a situation where much of Kansas has below average wheat, that probably means we're going to have lower basis now, but that could stick with that crop all year, right? So even in March, we may not see it even come close if you're in a pocket where grain quality is very low, because they're not going to want that very bad, right? Okay, now this is some of this information charted. And I just want to give a shout out to our good friend Steve Clinton, who emailed me after last month. And he said, hey, Mark, sometimes it's kind of nice if you put a chart and then maybe even center that around where prices are now, right? So I've got that 578 centered up there. And as prices go, if prices would go down from that or prices go up from that, how would each of these things work out? Now, I outlined several things. On this chart, I've got on-farm storage, on-farm storage hedged and unhedged, commercial storage hedged and unhedged, selling the grain, just selling it and being done with it. And so it kind of just basically shows, providing our basis estimate is correct, 40 cents under, the storage hedge provides steady, positive returns. Now, again, note that commercial, that elevator storage isn't a whole lot better. So I really wouldn't recommend that. But if you had on-farm storage, again, this does show that it would be significantly better than getting that 472. Unhedged, if prices go up, you do way better. If prices go down, you're really going to get hurt. That's pretty simple. Now, this next chart basically looks at, I take out the unhedged storage, both commercially and on farm, and throw in that selling a grain, buying a call, right, which has that very low base if prices fall of about 431, but then unlimited potential if we can get prices up higher. And then selling the grain and then buying a call, so the call option spread, where we raised our minimum, but we also put that cap up there at under five, just under that 530 level. But it gives you an opportunity for a price rise and to gain, and that actually gets you better than the storage hedge. But again, boy, and I think we got to look at what Dan is thinking as what kind of prices we might see in the future here. Are we going to see prices rally? But we really wouldn't see. We'd have to take like a 75-cent rally before some of these options would do better than that on-farm storage hedge. So again, no recommendations, but I do hopefully this helps by kind of charting this out and looking at what our alternatives are. With that, I'm going to pass this thing on to Dan, try to give him a little bit more time today to kind of look at these reports. So stop share.
Mark, we did have one question.
Yeah.
It's in the chat there. Doing a call spread, would you suggest having one of them at the money or both of them out of the money?
Typically, I would suggest you look at them all ways, but I kind of like that at the money because yeah, I know it's going to cost. But again, I would jigger my the one I'm selling to help me afford it, right? But I'd probably go with the at the money myself because that way it kicks in a little quicker. So I guess that'd be my 2 cents on that.
Well, I appreciate the chance to speak to you. And you know, uh, we debated on whether to have this meeting today or if we could do it a day or so after, but we decided to embrace the rush, because today is report day, and it's interesting to look at the results. I think the main results of the acreage report and the stocks report. Again, there's a few things there. We'll look at some acreage changes that came about, but I see the markets have responded in kind of a nonplussed manner, at least initially. But there are some things there that are at least moderately, slightly friendly to some of the crops. A few less crops planted than expected for some, and we'll go from there. So anyway, here are the results of today's USDA acreage report, and really of the reports that we marked on the calendar starting in early January that we'd be watching for. This is the one. First the prospective plantings, because that probably sets the range of where we'd be at, and most of the time that pretty well hits where we're at, unless we have a big planting problems with excess moisture or something happens geopolitically that really shifts us around. But anyway, you can see here corn acres in that we had coming out of the prospective plantings report, 95,326,000 acres of corn that were projected to be planted this year, and the pre-report estimates were for some increase on that, but it turned up to 95,350,000, but it turns out that we came in with a number that's below the prospective plantings figure by about 125,000 acres. So not a big change in the supply demand balance sheet, but a little bit of a lessening of at least the crop acreage base. And there's the projected harvested acres. I don't have that on here. Are 86,774,000, and we had been projecting 87,315,000. So that's about 500 to I always have to make sure I'm talking the right units here. 500,000, 600,000 less acres times whatever yield we put on that, 180 bushel, 181. So you just have had with this number, which the USDA will use dutifully going forward, you'll lessen the size of the crop. And really, you look at that the U.S. corn supply demand balance sheet for new crop 2025-26. It's already projected to be pretty down at 1.75 billion bushels. And you know what? If we made no changes in use, you'd be at 1.6. You're heading towards 1.5. I had read a statement by a good long-term analyst that I have followed over the years. He said, you know, that the market has basically said, okay, we're planning on a large crop. We don't see anything in the way right now. So whatever, even though that ending stocks figure for corn on the supply demand balance sheet looks like it's a little bit at risk, we'll just trust that we'll get a big crop and it won't be any problem. So that's kind of the attitude of the market, and I think you see that with the response today with regard to corn. For soybeans, again, we came out of the prospective plantings report. And Rich, they can see my pointer here, can't they? Is that correct? Yeah, so that helps a little bit. 83,495,000 acres projected out of the prospective plantings report at the end of March. And now we've come in, the market was expecting that would go up to 83,655,000. Turns out it went down 83,380,000 acres. So, and the harvested figure we had been projecting that at 82,700,000. Well, now with this, the latest numbers coming out of this acreage report, 82,535,000. So about 165,000 less acres. And again, just a matter of which yield do we put on that? If we stay with the USDA's projection of 52.5, we can pretty readily figure out what that is. If we don't get that record high yield, and that's ditto the same thing for corn, then you've got a bit of a different situation. So 295. So you put that into the supply demand balance sheet for U.S. soybeans, 295 million acres. And like I say, I don't have my calculator out to figure all that. You know, you're getting down to 250 million if there are no changes in the usage numbers. So we'll see where that goes. For wheat, you can see not a lot of changes, and really for us, we're harvesting hard red winter wheat, so we're part of that winter wheat figure, and not a lot of changes there, just up slightly, about 10 million. Really, all the shouting for wheat is coming along the lines of harvest. Some harvest delays, quality issues as had been mentioned, and we'll come back and talk more about wheat later. But not a lot here at this point for the acreage report that affects the wheat supply demand balance sheet much. Then we did see for grain sorghum that there was a projection, and again, this big crop for Kansas, of course. But the U.S. numbers are we came out last year at 6.3 million acres planted of U.S. Grain sorghum. Came out of their prospective plantings report basically about 6.6 million. You can see over here. Came in with 6.2 million later on. I think we've just been hearing, sure, supportive of the grain sorghum industry. I think that the impact of slow exports tied in with this U.S.-China trade route, which, by the way, we have word that's solved. So that for us is kind of a wild card. I don't know that we've seen a lot of buying come charging into the market yet from China on these crops, but if that in itself is probably may be the single biggest, most positive move that could happen for grain sorghum, is that we get exports moving again. But anyway, you got this. this situation down to 6.2 million. I think some farmers probably looked at the slower prices, weaker basis because of that export issue, and we shifted a few acres. Cotton numbers. So it's a kind of a tale of wild swings. Last year had basically 11.2 million acres projected coming out of March. This year 9.8 million. Ended up planted 10.1. So at least that's according to what the acreage report says. So interesting to look at that, and of course cotton in Kansas is a big thing. I noted that we'll see here later that the numbers for Kansas for prospective plantings didn't change, but there's some changes on a year-by-year basis, as in so many of these states. So just quickly, corn acres, not a lot of change. We're at 95.2 instead of the 90. The 95.326 million acre figure. So not a lot of changes there. You can see the percent corn planted. I wanted to show you Kansas over here. From the down a little bit from the prospective plantings report, about 3% or so, down about well, down basically 6.2 million acres, and we were 6.3 or so not too long ago. But just note on a year-to-year basis, planting a whole bunch of corn, and that's the predominant issue that we're looking at. And this report, it basically, the red dot shows where the actual numbers came in relative for June and for millions of acres relative to the range of guesses, and pretty much in the middle, slightly lower than the average guess. Soybeans, you can see the figure came in at on the overall figure again at 83.38, and they rounded up to 83.4 million acres. The harvested 82.5, and again down from last year. That number's down about 4%, whereas corn's up about 5 still. Soybeans down about 4, and you can see soybeans in Kansas, the previous change from the prospective plantings report, up about 2.3%. Still down about 2.9 from last year's number. So following the general trends of what's been happening on the corn versus soybean side. And again, this report pretty much in the middle, not a major surprise, maybe a little lower than had been thought. As you can see, a few of the pre-report estimates coming in lower than that, and this towards the lower side. Cotton acres, again, cotton overall downtrend. We had pretty strong year in 2022, but some ups and downs, but been generally struggling some. You can see the cotton numbers in Kansas, no change from the previous that prospective plantings report in March, end of March, but only Arizona and Kansas actually have an increase in cotton over the previous year. Everything else, all these other major states are showing sizable decreases. And again, the cotton number actually was a surprise. That's outside the top end of the range with regard to how this report came out. Winter wheat planted acres, again, not a lot going on here that's going to affect us. We're harvesting the crop. Spring wheat acres, though, gracious sakes, we talk about the trends we have in acres. If you're up there in the spring wheat industry in the northern U.S., you see a long-term hard downtrend. And you can see that a change in North Dakota and Minnesota, no change in South Dakota in terms of what's happened for acres. Again, the largest pusher on that, of course, would be North Dakota. You see Montana, Idaho, having Montana being up a bit, Idaho unchanged. But then overall, on a year-to-year basis, still either sideways to lower for these crops. I like to watch the quarterly stocks reports because it gives us an idea of the health of these sectors on the demand side. And really, for not a lot to say here other than that the corn number in terms of what we had a year ago for grain stocks was almost 5 billion, and we've tightened up enough that that from June 2024 to June 1st, 2025, we're down about 300 or 400 um, thousand, million bushels. Pardon me, and so not a lot of change there. Just down slightly, somewhat supportive. So so if the pre-report estimate was guessing about 4.641 and we came in about there, that means that there weren't many surprises in the one factor that we don't really have a survey on from plants or wherever, and that'd be on the feed use. It sounds like no surprises on the feed usage figure. Note for soybeans that a year ago, 970 million bushels, 980, the estimate over a billion. So a little bit of a negative issue there for beans. And have to go back and we'll dig into the details here to see if that's since we guesstimate the exports pretty well generally. I wonder if there's something in crush that's not quite as robust as we thought it would be. And really for us, I note again, come back to that comment about the quality issue. Note the grain stocks that we had last year's just under 700 million. This year projecting at 851, and it'll be a no doubt the quality issue in the broader picture of things, and this is all U.S. wheat, will be an issue. The what's pushing against that is just that much more wheat around to deal with. So if it's a localized quality issue, yes, it'll impact it could impact millers in the area, et cetera. But they're pretty wide ranging in where they get supplies, and basically what I'm stumbling around to say is it's a buyer's market. There's with more supply coming on, even with some lower quality, it's working against that issue coming to play. Now, if we were decreasing in supplies and quality issues were coming on, then yeah, you'd be looking for anybody that had higher quality wheat to really come in and shine. And we're getting into that issue of hard red winter versus hard red spring, and the quality that they have in the northern states again. And we've seen the downtrend up there in acres, but they wait around for us. I'm not saying this quite right, but in the hard red spring areas, they really watch what our crops are and what the quality is, because they're waiting to take what they grow and supplement to make up the protein difference down here. So anyway, that I think there's given that we generally have pretty much burdening supplies of wheat. This isn't the year where it would seem like our quality issues would really give us a premium. Now, turn this around and get a little tighter year in 1 or 2 years, then those quality issues probably give us a big push. Note for grain sorghum, quarterly stocks at 100 million, basically just under 100 million bushels, and stocks last year were basically at 50. So it's just the tail of a poor export year. And hopefully, as we talked about, this the apparent progress made in trading relations between the U.S. and China, by far the largest buyer, 98% of what's bought goes to China, generally some to Mexico, a few other countries, that will loosen that up, and we'll start to see things moving hopefully quickly. So you've got some details here that we don't have to go into a lot, other than you can see, gosh, 22% increase in wheat stocks are working against us seeing much in terms of the price wise, even unfortunately with some of our quality issues, as long as it's all not as long as buyers of wheat or producers of wheat gluten, and we have a couple plants like doing that here in the state, as long as there's variety of wheat quality around the country. It works, and they can get it from somewhere and ship it in. Then it works against us really seeing a price response on the quality side. Wheat stocks, you can see generally moving a little bit higher, has been higher in the past. And the wheat stocks number came in at the high side, almost the high side of what the market was expecting. So that's going to work against us. And it couldn't be at a worse time. We're already harvesting wheat. And oh, yes, we had the stocks report figure that came in higher than most people had thought. So again, kind of a strike one, strike two deal. Corn stocks down 7% from a year ago. And pardon me, let's see here. And you can see ups and downs in various states, on farm, off farm. Corn stocks generally moving along pretty much sideways, except 2022-23 we had a tighter year. This figure for stocks right in the middle of expectations. For beans, pretty much again up 3% from what had been expected for the total, pardon me, 3.9%. You can see that number there. Interesting that the on-farm stocks of beans were down about 12%. The off-farm are up about 18%. So whatever beans there are, they're proportionately the beans that were held on June 1st are more so in commercial hands than they are, relatively speaking, compared to the last year or so, more so in off-farm storage than on-farm. Pardon me. And you can see that this figure came in towards the top end of the range of most of the estimates. There were one or two estimates that were really, really high, but for the general broad range, the general range frequency wise, it was just a little bit to the high side. So so that's what those reports were saying. They're so when we have more time to go back, I'll go back and look at the acreage figures, adjust them down, and they make the markets a little more, just marginally more responsive. The lower corn numbers, the lower bean numbers, marginally more responsive to any yield issues that could come in the next 2 months. And oh yes, by the way, it seems like we're almost all the way through that we're trusting that that great yields and large crops are here, but this is the end of June. We still have 2 months to go, and we'll see. Although I think, in fairness, with the moisture we've had so far, the probabilities of that large crop, low harvest yield, low harvest price scenarios have been creeping up. That's objectively true. Take a look at the weather. The last 30 days, we've had moisture. There's a 30-day accumulated precipitation through basically through yesterday, through the 29th. Not many stressful areas. A few spots in Illinois and eastern Iowa, but nothing major. And most of Kansas, pretty good for parts of say north central Kansas, and apparently the folks in I'm trying to figure out exactly where that spot is, but they're feeling persecuted right now at somewhere on I-70, probably about Grinnell and Waukene. Sorry, folks, it's just you're a little lower. That they've had other things going on in Grinnell for sure. We haven't had. I should be sensitive to that. And short-term composite drought indicator, again, any drought that we're having is more a Pacific Northwest and Mountain States situation. Some in the spot up here in North Dakota, but and some along the Kansas-Nebraska border, without question. But moisture generally through a lot of the other areas, just sort of neutral, really, through a lot of the 3 I states right through here. A few drier, a few wetter spots. Projections for predicted soil moisture anomaly, in essence, compared to historic averages, still showing that when you get into the subsoil and look at where these areas are, you still showing Illinois, parts of Indiana, fair chunk of Iowa, eastern Nebraska, parts of Kansas, still in the overall profile, still not still relying on moisture to come, because there's not that tremendous not a tremendously large amount of soil moisture profile to work with. And you look at the world situation. Here's compared to the rest of the world, this is how our soil moisture rankings look. You can see a little bit of this, what's going on in the Northwest, etc. Lots of problems up in Canada, generally wetter down in Mexico. Still these variable areas. A person reads the weather reports, worries about excessive rains in parts of South America, and I think a lot of that's right down in there, and generally forecasts of tremendous crops. And I see these drought maps, and I wonder how all that coincides. Still, but the market hears those reports, takes them, and I think they were bidding on prices for that. In fact, after hearing a steady week of how the safrinha corn crop in Brazil was doing just great, then that read a report over the weekend that said, "Hey, they're getting too much rain." So I almost don't know how to interpret all that with regard to what I see there. Uh, some dryness up in Russia, parts of Ukraine, etc. Some reports there of some lower yields coming in initially. So we'll see. Even that, you get mixed reports out of the news. They've had some dryness in parts of South Africa, shifted some of their import-export balances. So you see this, and between India and China, there were reports in the last, since we talked last, of enough excessive moisture in China and some of their key wheat areas, that the government was making pronouncements to farmers, encouraging them to figure out ways to still harvest what was there, and to deal with quality problems as we're concerned about, etc. So these moisture maps would be somewhat consistent with that in parts of that country. And note also that now dryness is creeping in to southern and western Australia. So we've got about 20 minutes. I want to hit on some key points that I hope can spark some thought and be of help to people. We look at the corn futures. Now I kind of shifted over my own thinking over from the July contract, because it's the last day before we enter the month of July. We're in the delivery phase. So shifted over to September, at least in what we consider the upfront month. These are the Friday closes, and you can see the fall off that's happened from lows that had been about 418, 417, now down to about 402, 4.5, etc. With and the news that came into the market generally has caused a lot of pessimism of late. And you can note that the trading volume, that would be the blue lines, all shifted out of the July contract over off into September. So I think it's not uncommon for the market, for grain markets, to see good conditions and just assume that the large crop is there. What's surprising now is that we're really discounting almost any element of crop risk at this point, more so than we have in the past. So I think that's probably a change in how the market views risk and uncertainty. But it is June 1, and we're really not. I guess if we have any risk that comes into this market, it'll have to come for later. And Mark, this is a challenge for you and I to think on how to handle risk and uncertainty in our winning the game framework, because it's not that we were off, or that the historic patterns haven't been working in terms of giving us pricing opportunities based on risk and uncertainty earlier in the year. But if anything, when you look at how much volatility is being represented in these markets, they're not showing as much volatility. In fact, now our pricing goals are maybe we're waiting for the actuality of risk to come into the market in July and August to actually bring us a spike back up into those areas. But if anything, it seems like we're shifting around and we're not responding in any strong way to the upside until we actually have it occur, which is different than the past. Mark, any comment on that?
Let's see here. Well, it took a while to get my thing on there, microphone on, but just to say basically no. Basically this year we've just been trending down. And, one of the things, if you look at, and I'll try to do that next month, you pull out all the years where we just saw prices trend down. One of the things we do see is that it does create some post-harvest opportunities, right? Because everything, and so once the reality of okay, here's where the crop is, and then we either start moving it or we start moving it, and hopefully we will start get some trade deals. We'll start moving some of this more of it out the door. We'll see those fundamentals kind of pull that thing back up. But this is kind of your typical year where some of those prices in January were the best prices we've seen.
Yeah, of late that's been the case. And this is more of a history, and a person could spend a fair amount of time. These are in looking at this and seeing when we've had pricing opportunities. And again, with these lines, you'd have this line to be for 2007 January, and then so January 07, January 08, and these are monthly high-low closes. You can see a drought or two in there. What happened in 2007, 2008, the Ukraine-Russia war, the aftermath of that, the aftermath of a price high that has happened each time it's come, eventually. But you can see do the spring highs hold? Do we come back later on in these markets? In the big surprise markets, you can like in end of 2020, you can see a big run up that happened. The ethanol push back here, 2006, 7, 8 issues coming into play. Have had in hindsight a rally, just as you said, Mark, came in 2024. Lows actually about right now, and then factors came together, drove us to the higher side, January, February of 2025, and then moving to the lower side. So I think it's it I guess we would sure stand by the idea of having price goals and having them cover cost of production. But if anything, just to see these patterns that are going on in these markets and how geopolitical issues are coming in and affecting them, it's not a resolute, very uniform market pattern that we're seeing in these markets. Generally, we're higher in the spring. Risk comes in, gives us something in the summer, but there's just a lot going on. Okay, let's move on here. So just wanted to, we got 15 minutes, and I'm going to show you some where the futures are at, what I think the probabilities are for where prices may go, and a couple things that stand out in terms of how an opening of trade is a real positive, particularly on sorghum. But right now for corn, you can see that this red set of bars are basically the net position of trade of managed money spec traders, and this is like 2 billion bushels on the buy for long positions, 2 billion bushels on the short position. So you can see their net positions. And note here, just within the last time, within the last year or so, from December 2024 to January to June 2025, that we'd run up to about 1.8 billion bushels long for the spec traders, a net long position, very, very optimistic. That fell off, and now they've come back down to about 300 or 400 in terms of bushels, million bushels to the negative side. And when you break out their longs versus their shorts, the short positions about 1.75, 1.745, pardon me, 1,745, pardon me, 1.7 billion 745 million bushels to the short side. So pessimism right now being expressed in the markets. That all that can shift around pretty quickly, but right now with no news to make them optimistic, we're we come in on a daily, weekly basis and just tend to build the negative positions. Would note that the futures bidding about 431, and that would be this black line. You can see the typical seasonal pattern for Kansas prices. Take the futures, adjust for basis, and really we're just when you look at the pattern of futures right now, it's just almost step by step tracking a seasonal average price. Just betting the seasonal averages is what we're doing, or what we're showing right now in the futures. So the markets are expressing themselves, and futures are just slightly higher than what the USDA has been projecting at 420. And cash prices, just note, not a lot going on other than basically a par bid. Futures equal to cash with a 1/4 of a cent differential to the negative side. 417 the high price Garden City area, 407 Topeka, 403 Pittsburgh for cash prices. And note that wheat prices have fallen off enough to where the cash price for wheat is pardon me, I said that wrong. The cash prices for corn have fallen off enough that the cash price for wheat is 109% that of corn, which is generally in the vicinity. You get over 105, 106. In general, it's not profitable to consider feeding wheat. So corn prices at this time have fallen off like that. And you can note that, by the way, Rich will tell you that our ag manager basis tool is now working this morning. It's an opportune day for that to happen, Rich. It's worked good. Anyway, but you can see very weak basis. You know, if you see the futures low for whatever set of national or international reasons, that's one thing. But our own basis levels in Dodge, well, I've got two Dodge City numbers there. Dodge City, I meant to have Topeka there, but both showing really weakness across the state in terms of people of buyers of grain not having any urgency to come into the market to bid up basis. So right now in this Western Kansas location, I'm not seeing any urgency yet to come in and have to fill bunkers and on the part of buyers and users. Yields, I'm not going to talk about this. We've talked about this in the past. Right now, we're plugging in 181 bushels an acre. That's a previous records 179.3. That was last year, and so we'll see if that comes about with what happens the rest of the summer. This number now probably going to get whittled down to 15.6 or so, 15.65. With the lower corn planted and harvested acres projections. Usage figures, again, really no change in expectations. This probably holds up pretty well. The thing, maybe the best news is that it's not weakening. And just note, so 1.75 billion bushels ending stocks for corn. That's and that's before we start whittling away at the usage figures. So this is probably going to be 1.7, 1.65. When we start to see the markets really start to move around and respond, you get down to 1.235, 1.35 to 4 or something like that. And so we're basically, if we have any crop problems that end up and shave 500 million bushels off of the U.S. corn crop down from 15.6, 15.8 down to 15, then we'll have to do some price rationing. but that's not here yet. So we'll see. But that's what I would watch for the rest of the summer, that we can still have a 15 billion bushel plus corn crop. But if it's only 15 billion bushels and not 15.6, then ending stocks figures start to get down to 1.5 or below that. And the prices come on and prices get stronger later. So Mark, that'd be consistent with your statement of possible post-harvest strength. So we'll see how that comes about. Exports, corn exports, almost tied for the strongest we've had in years. Previous record pace was 2020, 2021. I think that may have been tied in with Ukraine, Russia, Black Sea conflict worries. But so anyway, strong export pace, a little bit weaker U.S. dollar, and increased domestic use by other major exporting countries, all at play here. Our largest buyer is Mexico, 33% of our crop goes there. Japan, 18%. There's a name you don't see on there anymore, and that's China. China has kind of vacated the premises of buying from the U.S., has been going to Brazil, Argentina, and we'll see. It's so right now, stocks, U.S. corn stocks to use. Here's that 1.75 billion bushel projection. I'm kind of revealing my hand. There's probably about a 40% chance that this is going to come about, and that's up from 30, 35. We've got decent crops so far, and if something's going to come in, it's the window is getting pretty narrow in July and August for it to happen. But this at 181 bushel gives you about 11% stocks to use, and that price USDA is projecting 420. And so if my own thought would be it's about a 40% chance that we get the 181, about a 40% chance we get 179. Basically, we're about 80% chance we're going to have somewhere around 180 bushel corn, but still a 1 in 5 chance of one of these other scenarios coming about. So Mark, I guess I'd invite your thoughts. It sure looks like the odds you have strong odds that we're going lower into harvest. Still a chance of some of these other things coming about. Does that affect when you look at that? That's that type of an odds of outcome. Does that give you any thoughts on what impact that would have on our marketing plans?
Well, I think, the goal is that we don't want those plans to change a whole lot, right? So
Right.
we kind of create a plan, but what it means is that we're probably going to price less, right? Price less here as these prices continue to go down. Now, again, everyone's got a different situation. Obviously, some of us can store it, some of us can't. But I think it's just it shifts when we're going to be, when we might be able to try to price this crop and what we might do, right? If prices are still very, very low at harvest, well, then we start looking at those decisions. Do I try to store it or not? Or do I buy calls and those kind of things? But I think what the result here is that we're not going to get as much price as we had liked.
And if something does appear that brings volatility in the market, we get a spike to the higher side, then it puts farmers in that tough situation of saying, well, is this for real? Let's say we get to $5 corn, and between now and then, on some set of circumstances, domestic or foreign, then probably after seeing where we're at now, it probably makes us more inclined to price whatever comes along, just because the odds are, as we're sitting right now, that we'd be going to the low side. Note that the USDA's projection of 420 at 181, just shaving that off to 180, 179, tightens stocks to use up at something more like 450, 460, 465. So there's still uncertainty with regard to whether we get this absolute record high yield that the USDA is projecting. And if we don't, then we have to recalibrate and figure out where prices would go. So that's, you have these other scenarios coming into play, and 20% chance you're above $5, but it's not a 1 in 20 chance of things really turning tough and getting like 175 bushels an acre. I mean, that could still happen, but the odds are creeping down on that. But it's just good to keep in back of your mind. And so I just would say for world supply demand, the for world corn supply demand, we're counting on for that next marketing year, the one that starts on September 1st, that usage will continue to be strong, and and you're counting on a crop in South America that won't be planted until well, for months yet. So anyway, the expectations are for continued growth, strong exports, and actually, even with a crop coming on, projection for the next marketing year is 13-year low. So we're not just a wash in corn in the world. And if you look at it from a world less China point of view, again, still not rebuilding stocks. It leaves the door open for volatility in some way, shape, or form. Okay, so I want to move on. Take a look at sorghum. Sorghum prices been really struggling with regard. You can see it in the basis levels, and in that places that were the strongest export hubs, Salina, Topeka, they're now at 80, 86 under Hutchinson. So we desperately need this situation to turn around. And again, the best positioned commodity to gain, well, between soybeans and grain sorghum, they both would gain. Grain sorghum would really gain if the U.S. and China loosened up relations on the trade side, and we'd get back to something near normal for U.S. grain sorghum exports to China. Okay, move quickly here. Soybeans have been more of a sideways situation. You can see the trading range that we've been in basically since through late winter, spring. Here of late, more like 1025 to 1075, 1080. At the bottom of that right now, about 1033 and a quarter. And note that again, well, this was as of yesterday, Sunday, when I pulled this off the web. 1024 and three quarters with some late trading. So we're certainly not in any of these areas, but we're not as low as some of those areas that we've had in previous years before we got above $10. And the market's right now still showing some positiveness, and a net positive position for managed money traders. Not tremendous like we have been in sometimes in the past, and the longs are a little bit have a more quantity, more volume than the shorts at this time with regard to the contract. So a little more positive for soybeans, and the USDA's projection and what the market is showing is just about identical. Again, following very much a seasonal pattern going out into the future. Cash prices pretty weak. There's one or two prices in Topeka that really stood out. You see that here's this 19-cent underbid at 1009 in Topeka. Everybody else below 10, they're either they're filling some transportation, doing something, etc. But you have some areas that are really, one or two areas really standing out, others that are pretty weak. Basis showing a little bit of improvement. That's this blue line. It gets really messy when you get the July, August, September contracts going back and forth, but strength in a little bit stronger basis in Hutchinson, Ottawa, a little bit of a trend higher, but more so there in the Hutchinson area. Yields still projected to be 52.5, record high. Do we get that or not? With that and a little bit lower acres, if we don't get that yield, we get a little bit weaker, well, and the lower planted acres, as we talked about coming out of this acreage report, this number probably gets reduced some, 4.3, 4.25, something like that. If we don't get a record high yield, it really gets reduced, and then we're probably talking about a different scenario. Okay exports, not tremendous, just okay, kind of in the middle of the pace of where we've been. China's still having come in and has been a buyer this year of U.S. soybeans. Probably back off as Brazil gets all their crop in, and their shipments have come in, and from Brazil have slowed down U.S. shipments. So that's we will have to weather that time frame, get to our own harvest when we're in better position to be export leaders again. But overall, a more positive collegial trading relationship between the U.S. and China is certainly positive for soybeans, just as it is for grain sorghum. And you see the strength here in crush and the relative kind of moderate weakness to moderation in exports for beans. This crush area biofuels being part of that certainly are in play. And note, we haven't talked about it here yet, but the EPA came out with rules that are very friendly. I mean, not just slightly friendly, very friendly to biodiesel production going out into future years. So this trend that we're seeing in soybean crush, and again, Kansas has two plants that I'm aware of. There's is Cherryvale and Emporia. We're in prime position to see the soybean market really stay strong domestically, be encouraged, I should say, be supported by strong crush. So again, EPA came out and announced that in the last couple of weeks, and there's not one voice in the ethanol in the soybean processing industry that didn't say this was a great thing. So right now you've got 295 million stocks to use, bushels in terms of ending stocks projected, 6.7% stocks to use. And again, we've just come in, lowered the acreage estimates. The 295 is based on record high yields. If it doesn't come, so based on that, $10.25. So every day that goes by that we don't have a crop problem increases the likelihood of getting strong yields. If you look at any of these other situations, instead of 52.5 to 51, 49.5, et cetera, but again, 51 to 52 and a half, pretty good soybean crop, but still this 20% chance down here on the bottom side. Anything other than 152.5 for a yield gets you stronger soybean prices. So Mark, when we put together our marketing plans, maybe it's a post-harvest world with regard to soybeans. We have to see what we actually get. And that plus the strength of domestic crush figures that could come into play kind of quietly give us some better optimism on the soybean side. Any thoughts on that?
Now, beyond agreeing with you, I think you're absolutely right. And really, both of your projections, right? They both had a 60% chance that we'd see a higher price than what USDA is suggesting. So that's very supportive of the fact that, yeah, post-harvest marketing may be where we're going to have to do it.
Yeah. The market is of a mindset that we've got large crops. We'll talk to you in October. That's kind of where they're at the moment.
Hey, Dan.
So, yeah.
We had a quick question, Dennis Hoopy. So can I still build budgets for next year at your 1073 bean price is his question.
Let's see here. Oh, that 1073 price, I think when we put that in that budget, that was based on October, November of last year. And so right now, if you ask me what number to put in there, I'd take the futures and I look at the basis, and it's probably like 1025 or so. But Dennis, if I know it won't. Well, here it's not that long. We'll be updating those budgets. We'll come in with the new October, November figure and go from there. But if you need something prior to that on the soybean side, we'll sure work with you guys and see what we can get a more localized, fine-tuned number at this moment. So Dennis, you asked me a straightforward question. I think I just delayed, obfuscated, and waved my hand. So in so many words, I guess I'm not inclined to just put to bed that we're going to have this record high yield. That gosh, there seems we could still have a great soybean crop and have a bushel and a half less yield than that, and just that in this balance sheet would give us some pretty strong prices, and just that would give us 1150 as a USD as a US average price. So I guess that 1073 kind of straddles this, doesn't it? I didn't know I was doing that. That Greg Ibadall and I were doing that in the past, but that's about right in the middle of where things are working out. Let's go talk about with wheat. So wheat's upon us. One thing's been happening quietly is that we're in the month of June now, and we've been calculating the wheat harvest price off of crop insurance. Last time I looked at that, well, the 27th on Friday is about 539. Of course, we had the 590 earlier for any losses for the planting price. So, following a pattern of in 8 out of the last 15 years, that price has gone down, and the last 3 in a row. So, right now, at the time we had the 590, we didn't think much of it because of where we had been in the past, but right now it looks better than where we're sitting at this moment at the 539. And wheat prices up and down, volatility in play. Note the trading range we've had of late, 533 and 3/4 were Friday's close. And again, we're in this area. We're just we've been down to just marginally above $5 as almost, if anything, a psychological barrier. 533, and we're conditioned. Our reference prices are a lot higher than what we're getting right now. We're kind of at the bottom side of this up and down action we've just seen. We had a war and other things all in play there. And the wheat futures with harvest as they are, you can see this net, which is what at least looks like to me a record net short position in the futures for Kansas hard red winter wheat. Of course, traded on CME, 381 million bushels short as a net position, and of course, that's a net of the longs and the shorts. We had gotten down here not too long ago to 574, near the record short. So, yes, the point is that it was kind of disconcerting to see this much bearishness at a time when we really, over the last month or so, we've had some pretty good wheat exports. But it's been a I guess the market during the growing season focuses on the supply side. The usage side might be great, but we're really focused on the supply side, and that kind of seems to be what we've had happen in the wheat market. And exports, pardon me, the futures projecting prices for this marketing year beginning June 1 through end of next March, 525, just about dead on equal with what the USDA is projecting at about 530, 540. Cash prices, again, you look at Salina, Topeka, 506 on the high side. Those are the highest prices, and those are individual, basically terminal elevators. Giving those bids. A lot of other country elevators, somewhat less than that. And I did note that you go back and you double check. There was one bid at one of those terminals for 543 out into June. So I don't know if that was a quality bid or what that was, but 543, and that was into the peak area. Another one at 538 in Hutchinson. So there are some bids to be had, but it's kind of a shopping deal to see how you fit them and what type of timely manner and what the quality specs are. Wheat acres, we've talked about this, etc. You can see that all U.S. wheat exports off to an okay pace. Hard red, really not too bad of a pace. We just came through this 24-25 year. That was, yeah, the 24-25 marketing year. That ended up here into March, and you can see in the red, just kind of a so-so year. The only year worse than that was 23-24. The last 2 or 3 years have been pretty weak export years for U.S. hard red winter wheat. So to finish up here, so right now the projections are 45% stocks to use, $5.40 as a price, and will we get that? The production figures, it's pretty hard to argue with the production. We could end up, and since this is a U.S. wheat situation, and you've got the hard red spring wheat in play to the north, they're not just in that tremendous condition at the moment, so that their shortness could bring the U.S. yield overall down tighter. But even with all that, instead of almost 900 million bushels ending stocks, you're still only down to 850, still over 40% stocks to use. To me, it seems like an export coin flip on whether we have higher or lower exports than we have right now, plus or minus 50 million from the USDA's latest projection. But with all of that, and on the positive side, if we get strong exports, get up to 615 or something. So that right now is about what you can see out there. But the world right now is full of geopolitical issues, and a lot of them involve Russia, Ukraine, China's involved in them, etc. So right now we're not factoring in any of that in here. But again, how do you put that in as a speculative factor? I don't know. But given that we can't anticipate those I'm sure if they're black swan events, whatever you call them, it looks like we're 5 to 550 for wheat. Possibility of something outside of that maybe, but unless one of those unanticipated things comes along, it looks like we're just so for the wheat market and wondering where we're going to go. And all that said, the world wheat market, world wheat supply demand still, we're not overburdened with wheat. We have an 11-year low for world stocks to use, but we're very myopic. If we have enough in hand for now, I guess that's all we're really looking at. We've been trending down and tighter. If these numbers are accurate, we've been trending down for the last several years in a row. For the world minus China, pretty much the same situation, projected to be on hopes of out for the next 12 months, be a little bit higher, still pretty tight. And generally in this situation where we've got down to, for world supplies, where we're just hanging at about 20.9, 20.8%. And that's apparently where we're happy at until something comes in and shocks that system. Well, we just really appreciate y'all coming on to these. I think our plans are to go through September with them, and we'll see. I think the next, honestly, if there's any weather related issues that affect some of these markets, feed grains in July, the oil seeds in September, in August, I think I would hope we'll catch them, and then the USDA infield surveys come in September, and we'll see where we're at by then. But these next 60-90 days, they're on the supply side, they're the determining factor. So we'll see where we go.
And Dan, there was a question from Luke. Any updates on CME introducing grain sorghum to the Board of Trade?
I think there's there's discussion of that. There right now, there is, if for grain sorghum to have a part in the delivery system for feed grains. So basically, we do a cross hedge between probably to the closest location. We basically go to St. Louis, and you're trusting that by the time someone gets corn delivered into their hands for on a hedge, if they're pricing pricing that by the time they exchange that corn for sorghum later on, if they want the physical product, then they're trusting that the basis relationship holds up. But as what gives a person pause to consider that issue is that we've had pretty weak grain sorghum basis here in our part of the world. And as a person who's looking to manage their risk with grain sorghum, go hedge it with corn and then be unsure of whether the corn to sorghum relationship will hold up between St. Louis and somewhere in Kansas. So if there's discussion, there is some discussion of whether there could be something that would serve grain sorghum oriented risk managers better, and so that's where if this is being as this is being discussed in by some folks, that's really what we're after is to look and see if there's a better way to protect the grain sorghum basis out in these areas. I see Phil Adams asking for a quick review of the global sorghum market. There's about 2 or 3 countries that produce grain sorghum to actually export. The United States, when it has it, and Australia. Some others can grow it, etc. But by far the predominant buyer is, at least for U.S. grain sorghum, is China. They have there can be a feed usage component, but there's a domestic beverage that's has been a very inelastic demand, been good for U.S. U.S. grain sorghum export sales to China. So and with that, and still grain sorghum is a very competitive feed grain with all of these other with corn. In essence, it's just a matter of making adjustments for the quality differentials. We've had some interesting discussion about tannin versus non-tannin issues that play when you compare grain sorghum to other feed grains. GMO versus non-GMO for sorghum, but that hasn't been the that hasn't been a big issue that's been pushed here yet. So I guess I really respect the grain sorghum people and all their efforts to support that crop and help it go forward. And I just think they'd be really pleased if the U.S. and China could reopen their trade and give that strong support for the sorghum supply demand balance sheet.